back to another episode of Beating Alpha. We have a very special guest, and his name is Leslie Awasom. So Leslie is a director of operations and co-founder of Xsite Capital Investment LLC. That, of course, you can go and check on the website. It's called xsitecapital.com, and of course, the link for that is going to be down below. He manages the company operations, market / data analysis, cash flow and budget analysis. Leslie bought his first investment property in 2017 and transitioned to multifamily investing in 2019. In 2020, he and his partners acquired a 20 million Class A multifamily asset in Washington, D.C. Leslie still works as a nurse anesthetic in Baltimore, Maryland. The Xsite Capital team also hosts a rapidly growing multifamily focused meetup in Maryland, where they provide resources and add value to the individuals interested in growing their wealth and changing their financial future. So Leslie is a husband, father of 2 beautiful girls, a newborn son, and loves to spend his spare time reading and flying drones. And here we go. So make sure to go and check it out, the website, and you can get in contact with him personally through LinkedIn or Facebook. And of course, those links are going to be down below us as well. So Leslie, I just want to say big thank you for joining me today on this episode.
Oh, thank you so much for having me. I appreciate it. Thank you very much.
Thank you. I appreciate it as well. And it's finally we connected, and I'm happy that we're doing this podcast episode. And of course, we're going to be covering a lot real estate, multifamily specifically. So can you just take us back, into the time and through your personal journey? How did you become a real estate investor? Can you, give us a little bit of details?
Yeah, absolutely. Again, thank you for having me on your platform. My journey to real estate, I wouldn't say it's a traditional one. It's one that what brought me here, some of the experiences I've had in life. I'm an immigrant. I came to the US 20 years ago from a small country called Cameroon in Central Africa. When I came in, my mother was here, so she brought my family here. So I grew up with my mother and saw her work hard and try to get us, my siblings and I, through school. And the traditional path was taught to us, all of us. You go to school, get a good job, and get a good career, and save your money and retire, which is the path I followed. Mine it wasn't a straight path, had some bumps along the way, but finally made it. And at least thought I made it, and graduated from school as a nurse in 2008. Started working as a nurse here in Baltimore. And around that time, that was when the financial crisis was happening. So I got the opportunity to witness other older nurses that have been working for years, like about 30, 40 years, that were getting ready to retire. One of them, that was my colleague, lost a significant portion of her retirement to the stock market crash. And just seeing her go through that experience kind of traumatized me a little bit, and kind of opened my mind up to say, this cannot be all that is available. This cannot be the only path. You can't work your whole life and put everything down the line and then have an event like that on one day take it all away. So, but I wasn't quite sure what the alternative was. Everybody around my circle, my community, was the same path: go to school, get a job, and if you need more money, you go and get another degree. And which is exactly what I did. Went and got an advanced degree in anesthesia, became a nurse anesthetist, a very rewarding career, well-paying career. But that itch remained, that question of what next, like, and being in a W-2 career, realizing that there's a ceiling of growth, also motivated me to try to seek other alternatives. And as I was asking those questions, I came across a book by Robert Kiyosaki named Second Chance at Your Money and Your Life. And I started reading the book. And the book really spoke to me. It felt to me like Robert was my long lost uncle that was telling me exactly what I needed to hear at that point in time. So I followed exactly what he recommended in the book. And that's how I got into interacting, learning about real estate, interacting with other real estate investors. Then finally took the plunge in 2017, bought my first investment property, then transitioned to multifamily in 2019. And here we are today having this conversation.
Here you go. And the journey still continues from here. You're still going.
Absolutely.
Yeah, just the
I feel
beginning.
like it's just beginning right now because I have more of a clarity of mind, clarity of vision, and clarity of mission.
Yeah.
So I feel like the journey is just beginning.
Awesome. That's beautiful. So can you take us back to the 2017 and talk about the first deal? How did you acquire it and where was it?
Yeah, so the first deal I acquired in 2017 is a condo. So around 2015, when I purchased my personal home, I had been talking to my realtor and just asking him questions about real estate, because that's around the period of time when I was getting exposed to all this other knowledge. And he has been helping a lot of investors purchase property. So he told me that he does that. So, but I wasn't ready yet, mentally, financially, or in any way. So later on down the line, I contacted him, told him if he saw something that looked good, he should let me know. I had started going to RIAs and all this other stuff, interacting with other investors. So he called and told me about this property. It was an estate sale. The person that owned the property just passed away. So it was on the market. The deal seemed great. He loved the area. He had some investment properties himself in that particular neighborhood. So he encouraged me to go ahead and take the plunge. I spoke with my younger brother, and we decided to partner in on it and purchase the property. Needed some work done on it. Went through the whole process of renovating the property. Did the project management, brought the tenant in. I still manage the property myself as a property manager. So that whole process was so rewarding. I really did enjoy doing it. Being able to conceptualize this building, like take it from where it was, then moving it to where I wanted it to be, and bringing the tenant in, then seeing that cash flow. Then a few months later on, the values of that neighborhood went up for some reason, and so I was able to see everything that I read in the book come to life. So for me, that was proof of concept. And I realized this is really something I really enjoy doing, and let me scale up on this and keep moving forward. So that first day was pivotal, because it's what moved me forward to where I am today.
Beautiful, beautiful. So again, I would like to kind of understand your personal mindset when it comes to scaling business and investing into multifamily, which you transitioned in after a couple of years when you acquired your first deal. So can you talk about how that idea came about? Was there a person or some sort of event that kind of influenced you to follow that path? And what was your first kind of hands-on experience with the with the multifamily?
Absolutely. Yeah, I'll give a lot of credit to my initial partner, Mr. Tenny Tolafari, our director of acquisitions, because right when I had gone through my first property and saw the proof of concept, I was looking to scale. I met Tenny. Tenny was introduced to me by my wife. I think my wife got tired of me talking about real estate, and he found me a friend. So, so Tenny and actually, Tenny was doing a presentation. He did financial services, so he was doing a presentation where my wife worked. So my wife thought he was speaking the same kind of language I had been speaking. So he connected us. We met. Realized we were reading some of the same books. So we started meeting every Friday and play the board game, Robert Kiyosaki's board game Cash Flow. For months, we would just meet every Friday, sit down in like a coffee shop and play the board game and talk business and talk about life and everything. So we realized that we had like different strengths. Like there's a lot of strengths that he had that I didn't have. He is someone that's very courageous. At that time, I still had a lot of fears, a lot of psychological blockages, which he didn't have. So we decided to partner up and scale the real estate business. So when we did, we went out, put in offers on a few single family properties, started going out to meet up events, networking events, started reading books on real estate. Then we came across a book by Grant Cardone that talked about multifamily. Everything he said in the book made sense. I am more of an analytical guy. I like to look at the numbers and look at how that affects life. And the way he explained the scalability of multifamily and how that economies of scale benefits you really made sense to me. But I was scared. I was afraid of the bigger numbers. Looking at that was something that was strange to me. But fortunately, my partner, he has been in the business world, so he had a different mindset. So and we decided at that time too, I was engaging in a lot of personal development, which I credit for a lot of this stuff. And one of the things I heard Les Brown said was, the thing you fear the most is where your biggest growth will come from. And that is exactly when I felt that fear, I realized that going after this is going to make me grow. So we went after it, went all in after it, decided to put everything else aside, focus on multifamily. So we started our company, started facing the challenges and going, meeting other people and building the network. Then along the way, we met our third partner, and then things just took off from there.
Here you go. Here you go. So Grant Cardone, I mean, he's very entertaining personality, you know, like, but instead of him pitching his way into you investing in Cordon Capital, you decided to kind of create your own multifamily business, which is great. So again, not long after that, since 2019, a year after, you acquired the first, Class A multifamily deal in Washington D.C., which was like $20 million deal. So it's not like the small ones. It's not like $2 million deal. So can you talk about how did you source the deal and how did you close it, and for what particular reasons have you chose this particular property?
Yeah, absolutely. So this was that deal was a pivotal moment in our growth. The journey to get there was not a smooth one, as always, faced with challenges along the way. But every time we face a challenge, we learn from it and we grow and become better. This deal, it's a great deal. We knew about the deal about a year prior to closing. One of our partners that brought this deal to our attention as something that they might be working on. So we told them that this is something that we want to be part of, but at that time we're still building the relationship. So as the deal matured along the way, kept learning about all the numbers and figuring out everything, um, we finally came into an agreement with them to take the deal down together. And that was right around the time to when this whole COVID crisis was happening. But at that point in time, we had enormous amount of faith in the deal. This is a very strong deal in a very, very strong market. And we had been doing a better job of building our investor base and talking to people about what we do. So bringing the deal live and presenting it to our investors, the process became a smooth process because we were able to close on the deal without having any major issues.
Got it.
And you also asked why we choose the deal.
Yeah.
Because of the phase of the economic cycle at that point in time, we were very selective on what kind of deals we go into. Wanted to go into a deal in a strong market, and mostly Class A or Class B deals in markets that are that the data supports that is could produce. And Washington D.C. is one of those markets. And as you can see in every report that is coming out now, we didn't even know COVID was coming, but even with COVID and everything that made things worse, the DC market is still showing as strong to be able to rebound from any crisis that we have.
Got it. Got it. So the question that I have in my head is why Class A type of properties that you've been looking for? I mean, why did you, acquire the Class A properties? And maybe for the audience who got used to the, C kind of, BC type of deals, what is the difference between buying a brand new built property versus buying kind of value add type of deal?
So this is not brand new. This building was built in 2011, but it's more on the
Okay.
newer side. So it was fully occupied.
So it's a Class A location.
Yeah, Class A location as well, and the building is less than 10 years old, so it's considered Class A as well. So the reason why I specified that is because it's very important, especially in a cycle like this, because a lot of the newer Class A's that don't have tenants and are having trouble leasing up right now, putting in new tenants in this kind of a market cycle, But the data that we reviewed supported Class A being stable in the last economic cycle versus Class C and Class B. And as things turn out with the COVID crisis that happened, the people that got affected the most are the people that are tenants in Class C and in the lower class assets. We love Class C assets, we love Class B assets, value add as well. But it's for that period of the market cycle, Class A and Class B plus seem like the best option for us.
Is that how it works in Baltimore? Like in your particular area, because you're talking about like the people who are renting from the Class B and C type of deals. Those type of kind of value add deals, got a lot of vacancy rates. Like the vacancy, number got up instead of buying kind of brand new, which is like 2011 is still counts as a brand new is the Class A property. So is that works particular in Baltimore, like Maryland area, or like the Washington D.C. area, or are you seeing that kind of trend across the states?
No, generally across the country, when this whole COVID crisis came, most of the people that lost their jobs were like the service industry, the retailers and stuff, and most of them are like inhabitants, the hard workers, like the lower income workers, most of the people that got affected. The tenants in most Class A buildings are the ones that work for like the Fortune 500 companies and the bigger companies, and a lot of those had the income to sustain and let their employees even work from home and do that, which is a benefit that Class C tenants don't have. So that is something that was seen, but with the economic package that came, that kind of came and supported. So it's not as bad as it would have been, because if you look at the numbers now, multifamily is still holding strong across all assets. But the classes that have been affected the most are usually the Class Cs, and it's for the reason just because of the way the COVID affected the job market.
That's interesting. So have you got the vacancies? I mean, did the number got higher? Did you get some people leave from the properties when when the COVID happening? Because I'm sure, of course, it depends on a case by case situations, and of course there may be some people who work in these Fortune 500 companies, but at the same time they might be uncertain what's going to happen with the business or with the job that they currently have, and maybe they're thinking about saving up a few dollars and kind of scaling back to, let's say, B or C type of property and renting from those type of deals. So maybe you can share like what is the current like vacancy rate that you have on your deal?
So right now, our occupancy is right above 90%, and it's not necessarily because of people scaling back to Class B. Our problem is unique, which is kind of interesting in the DC market. 2020 was one of these years where a lot of deliveries were scheduled to come to market in DC, like brand new product, and a lot of them came live mid this year and towards the end of the year. So you have huge luxury apartment buildings in DC that are empty, that are like 40% occupied. So there's a huge amount of concessions being given out to tenants to get into these buildings. Added to that, with the COVID, there was a brief scare with people running away from the cities and trying to go to suburbs. So that affected the rental population in that area, but it didn't affect us as much. The great thing about going into a kind of asset like this is, in this kind of a situation, is especially in multifamily. That's why multifamily is such a strong asset class, because even with some of these challenges, you still have enough income from your existing tenants to take care of all your expenses and cash flow even. So all of that was underwritten going into our project. So yeah. But to your point, that happens too, where in downturns, people scale back from Class A to Class B assets. But again, if you have a Class A asset that is already at the market rent that is competitive to other Class B plus assets, why scale back?
Yeah.
And that's what we have. That's a unique strength we have with our property.
That is awesome. Yeah. So I see your point. So of course we can talk about operations and the way you're managing the deal on a day-to-day basis and rent collections. But one thing that I wanted to ask you, like, how big is the deal? How many units?
It's 49 units.
49 units.
Yeah.
Okay. So what do we have? So we have 400, like almost 400.
390.
Yeah, 400, 410, almost exactly $408,163 per unit, right?
And I was actually about 390 per door, but the other expenses, it's under like 19.6, but the other expenses is part of the raise and everything else. But it's about 390 per door, correct?
Got it. So when it comes to what you're currently looking, I mean, in the pipeline, because I assume, and maybe you can correct me if you're looking for actively for deals or not, but let's say for the future, are you going to be looking for kind of same kind of Class A, B type of deals, or you're going to be, maybe diversifying your efforts and going in a, C, like B kind of value add type of deals also?
With things transitioning in the future, as we see it happening, we're looking at C plus B class assets. We're looking for value add. We'll take a look at we've underwritten a few Class A deals, but the numbers don't check out for the appetite that our investors want. And the other unique thing about this deal in DC is we have the opportunity to exit out as condos, which was something that made the deal work. Because this market is a strong market for that kind of an asset class. But so the numbers that we could get out of that deal, we're probably not going to get on many other Class A deals. So we're looking for deals that could provide great returns for our investors, because our goal is to grow the wealth of our investors. So those kind of assets are like class C and B plus value add. So that's what we're looking on for our next acquisition.
Got it. So when you're talking about you saying strong market, like what do you mean maybe specifically? Like who's the driving force for the employment in a neighborhood?
So right now, for DC, the driving the number one employer, of course, is the federal government. Then we have Amazon moving its HQ2 over to DC. Then you have all the other industries that are related to the federal government. So DC is a strong market for jobs. Jobs is the number one driver that we look at in the market. But we're also looking to acquire properties in the Carolinas, and we follow the same process. We look for cities that have a growing population, that have a growing job market, that have the strong fundamentals to sustain any kind of changes in the economy. And we're very glad that we use that data process to identify markets, because all the markets we're in are popping up on most of the reports as the top markets to survive during this after the COVID crisis. So yeah, we're very happy with the model we use to pick this market.
Good, good, awesome. So again, when it comes to those future deals, as I mentioned, C plus type of value add, deals, and again in Carolina. So maybe you can talk about a little bit what other states beside the Carolinas you're looking to invest. But when it comes to the particular deals, is it going to be same size, or you're looking kind of bigger deals?
So we also looking at for right now we focus on two primary markets, the Carolinas and Houston, Texas. For Houston market, we work with our partners there on the ground to see if something comes that makes sense. As far as the size of the deal, in the number of doors, we're looking for something that is bigger, but obviously the price is not going to be the same like the DC market. So it might have a bigger unit count, but the price is lesser than what we did with the DC property. So we're looking for something around the $10 million range of 50 to 150 doors, class C, B plus kind of asset with value add. So we've had some interesting opportunities come along our way that we are currently observing. So hopefully we'll have another acquisition soon.
Got it, got it. Yeah, I'm sure it's going to happen. But on that note, can you talk about again the deal sourcing part? Because as you know yourself personally, I mean, there's a lot of people are saying it's very tough to find good deals during these market conditions. So for whatever reason, and maybe we can uncover for what reason it's hard to find the deals, and maybe we can give people some advice on sourcing deals. Of course, that's through, again, you mentioned, the personal network and broker relationships, but maybe using kind of, I don't know, some interesting kind of creative strategies and that help you to source deals.
So the most important, like deal sourcing is so important for us. My partner, director of acquisitions, moved from DC to North Carolina,
Wow.
just so he could position ourselves. We could position ourselves in that market and have the conversations, handshakes, and talk to people. Because what we found is that is most effective for us is going out, meeting brokers, building personal relationships with them, talking, shaking hands, touring properties, visiting, and building these relationships. We think the number one strategy to get deals is relationships. The relationships that you build in this business will get you far. And that is what we focus our attention on, building strong relationships with our partners on the ground. And that is one of the primary reasons why my partner moved down to Charlotte, so he could be in that market and continue to build these relationships. Yeah.
That is awesome. That shows that your partner is committed, because that's
Absolutely. We can't thank him enough. We call him Tenacious Tenny, because he truly is tenacious. And again, when you work with a set of people like that, him and my other partner Julius, that we're all fully committed to these opportunities that we have to bring to our community. It's amazing. It's an amazing journey.
Got it. So for somebody who is brand new and they're looking to get involved, let's say with real estate business, let's say like especially multifamily business, like what will be your kind of process or maybe advice or strategies that you would give for somebody when it comes to vetting potential, business partners, and maybe some kind of things that stand out and somebody should pay attention to when it comes to, doing business together?
My advice would be to vet yourself first.
Good
A
advice.
lot of times, people say, oh, I need this or I need that. And, a lot of the needs that you have is because of who you are on the inside, So my most important advice would be to vet yourself first and see the reasons why you're going into any partnership and where you're coming from, and see where you're weak at and where your strengths are. before you go out, instead meeting people and see if those people fit your needs or work vibe with you, but if you are not able to look at your own self in the mirror and see your own shortcomings and strive to be better, it's very tough for you to be in a partnership with any other people. So my number one advice would be to vet yourself first and take time, get to know whoever it is that you want to get in a partnership with, and be committed to each other and be committed to the growth that you're trying to move forward. Again, I think one of the reasons why our partnership works so well is because we are all committed to each other's growth. We're not just out of this to come and make quick money or to run here and get, we are each and each other, we're committed to each other's growth, and we help each other grow along the way. So it becomes more like and we know each other's strengths, we know each other's weaknesses, and we see how we could complement each other as we move forward.
Yeah, and that is awesome. So again, talking about, if you don't mind me asking about the operations a little bit, because I mean, during the COVID pandemic, and of course, there's trouble with some operators when it comes to the rent collection. So maybe you can talk about that a little bit, because who knows how long the COVID is going to be around. Maybe you're going to find another deal, and I'm sure you will find it, Carolina, and you're still going to close on a deal, and you're still going to have the same problem when it's, rent collections. So can you talk about, for the audience, because, multifamily is dependent on that cash flow that you can, run the property, pay the investors, and, get your own personal fee. So how do you go about with the rent collections during the COVID times?
Again, that's why we're very choosy, selective of whatever deal we go into, because you underwrite. Again, with these deals, is from the purchase that you make the strongest decisions, right? You underwrite the property, you project the property based on a certain amount of vacancy, and you study the market to see where the vacancies are right now, and understand that the next 12 months might be a little bit challenging or even more, and you don't try to underwrite a great amount of growth during that period of time. And if you're able to underwrite that conservatively and the numbers work, then it's a good deal to move forward with. So far on our property here in DC, we have a couple tenants that have had some issues, but again, all of that was underwritten going into the property. So our numbers, we're still able to cash flow even with having those challenges going so far. And again, knock on wood, we haven't had any major challenges with this property, and we hope not to. We hope to ride through the storm and get to the end with this. But going into a next property, we bear that in mind. Try not to project any crazy growth within the first year or the first couple of years. And if the numbers still make sense, then we know, because the COVID crisis is going to run out, right? It's going to run out, and the economy is going to adjust, and things are going to pick back up. This is like a phase, and we at the end of a cycle and about to start another great cycle. A multifamily as an asset class is showing to be resilient and strong even in the middle of this crisis. Then it's going to be resilient and strong when the growth starts. So we keep looking for assets, looking for the right assets in the right market, and once something comes, we take it and we iron out our management, tighten up our operational screws, and make it work during this period, because we know there's a light at the end of the tunnel.
Yeah, exactly. So yeah, everything is temporary, So even the COVID, even the personal problems, the finances, whatever people, problems having right now, the ones who are watching, it is temporary, and it will go away.
Absolutely.
So yeah, but again, with action and with taking persistency, taking action, it will go faster.
Absolutely.
So, but focusing again on multifamily and educating people, and again, can you talk about your personal meetup group that you have in Maryland area? Like, how is the meetup working right now with the COVID? Are you doing any meetups virtually via Zoom, just like this? And like, what people are going to be learning in that meetup?
Yeah, so our meetup is 100% virtual now, and we're probably going to keep most of it that way, with maybe initial maybe once in a while networking events when things come back live. So the whole goal of our meetup, one of our mission is to, because when we discovered multifamily, and having been in this wonderful country for all these years and studying and learning all these things, and these opportunities exist, and realizing that we knew nothing about it, right? And the whole possibility of being able to learn about this asset class, learn about these opportunities, and bring it back to our communities is what really got us excited and got us to start this company. So one of the things that we place a lot of emphasis on is growing the minds of our community, our investors, and everybody that comes on our platform. So on our meetup, we strive to bring some of the top experts in the multifamily game, in wealth growth, in anything that has to deal with personal growth or financial growth, that come and talk to our community about how they could look at life differently, look at things differently, and get on that path to growth. And it has been great so far. We started the meetup not even knowing if anybody will show up, and then we are at the point now where we have over 600 members of our meetup group and growing tremendously. So we're grateful for everybody that's part of our platform, and we're grateful that we have this opportunity to be able to contribute to the growth of our members of our platform. So we continue to invite people to come join us on the meetup. Let's network. Let's learn about each other. We are still learning. We are sponges, open to learn. We learn a lot from the experts that we bring to our meetup group. So it's not just for our attendees, it's for ourselves as well. So we enjoy doing it for sure. And we enjoy meeting new people and learning about their own journeys as well.
That is awesome. That is beautiful. What is the name? What is the name of the meetup?
The name of the meetup is the Exciting Wall of Multifamily Investing Meetup.
Here you go. And that's available on meetup.com, of course. And
absolutely, yes.
Yes. So that is awesome. That is awesome. So, I mean, there's a lot of different great things that you're doing. I mean, currently with the multifamily deal that you have in Washington, D.C., and now like your partner and you guys are getting committed into finding another deal now in different market and adjusting to what's happening in the market. And, you know, at the same time, educating a lot of people, again, 600 plus people and counting. Hopefully it's going to, you know, come across 1,000 plus people after this interview is going to be over. But you know, you're providing a ton of value to the people and educating them about the other ways to invest rather than just handing the money, you know, to the Wall Street. So it's really awesome.
Absolutely. We're grateful that we actually found that possibility and we're able to transfer it to other people. So it's a great it's a great place to be in. So we're very, very grateful, and we don't take lightly the responsibility that we have.
Exactly. So kind of the last question that I had for you, again, wife, now 3 kids. So congratulations on that.
Thank you.
And in spare time, flying the drones. I mean, you're doing some, you know, again, the handling the family, the business, you know, speaking with people, doing the meetups, you know, being on podcasts just like this one. The really, really appreciate you coming on today and sharing the tips, the strategies, the mindset that people should have about investing. But what is the legacy that you want to leave behind you?
You know, I feel like I'm already living that legacy right now. My oldest daughter knows what an investor is, knows what investments are, knows what apartments are. She's 8 years old. I grew up, I didn't know all of that, you know. So being able to transfer that knowledge from myself down to my kids, it's one of my whys. It's one of the reasons why I get up every day and do this. You know, I have 2 beautiful daughters and a son. I value them very tremendously, and my wife. And being able to, at this point, by being on platforms like this, talking to you, I have people, long lost friends, reaching out to me and wanting to learn and wanting to expand and wanting to get out of their comfort zones. You know, to me, that is very important. You know, so I feel like I'm already living a legacy with my kids, and transferring the knowledge down from one generation to the next. And I hope they keep taking it down and spreading out the knowledge so more people know about what is possible and what is out there for them.
Exactly. That is so beautiful. I mean, I love the fact that you said, you know, I'm already living the legacy. That is super cool. So again, guys and girls, the ones who's watching, I want to ask you one thing. Again, if you pass along this information to the friend of yours who always talks about real estate investing, but you know, always talks about, oh, I lack the information, the knowledge, the tips, the strategies, the mindset shifts, pass this episode along. There's a lot of all these great pieces are in this episode. And of course, you should get in contact with Leslie himself personally. It's either LinkedIn or Facebook or through the website, and ask him those questions. You know, how do you invest? How are you gonna, you know, underwrite this deal? How are you gonna, why are you investing in these markets? And for those reasons, like, ask those questions, you know. That's why the interview is for, because you have to go and follow up with the people. And, you know, if you're looking to get involved actively in the deals, go and ask him, because I'm sure Leslie will find a few minutes to guide you to the right direction and, get you hooked up to the multifamily meetup group as well, so we can learn more. So Leslie, I just want to say a big thank you again for being on the show. I mean, I enjoyed your personal story, the journey, the things that you're currently working on, your personal business. I mean, it's beautiful.
Oh, thank you so much for having me. And like you said, if anybody wants to learn more, find out more, please reach out to me or any one of my partners. We're very open. All of the information and our personal contact information is available on our website. That's www.x as in xylophone, SITE capital.com. That's xsitecapital.com. We look forward to connecting with you and touching base with you and being part of your journey of growth as well.
Awesome.
And thank you so much for having me again. Thank you for having me on your platform.
That's no problem. Again, guys, make sure to pass this episode along. And as always, I'll see you on the next episode. Thanks for watching.
All right. Thanks.